Hi there, this is Michael Kramer of Ma Capital. Today is Tuesday, October 29th, and it's around 4:20 New York time. So economic data is going to really be picking up starting tomorrow morning, and we're also going to really be getting into the heart of earnings season as well here in the U.S. So tomorrow we're going to get ADP employment. That's going to be coming at 8:15 in the morning. This is going to be an important number to look at. Then we're going to be getting at 8:30 GDP annualized. This is going to be the first look at the third quarter numbers. We're looking for 3% on the quarter over quarter. Personal consumption is expected to come in at 3.3%. Price index is expected to come in at 1.9%. And core PCE quarter over quarter expected to come in at 2.1%. Then at 10 o'clock, we're going to get pending home sales. Then on the 31st, we'll be looking at the employment cost index. This is a number the Fed watches closely. We're looking for 0.9%. We're also going to be getting PCE month over month for September, 0.2%, up from 0.1. Year over year, we're looking for 2.1, down from 2.2. Core PCE month over month, we're looking for 0.3, down from 0.1. And core PCE year over year, we're looking for 2.6, down from 2.7. For the non-farm payroll, we're looking for 110,000 jobs to have been created, down from 254,000. The unemployment rate's expected to come in at 4.1%, in line with last month's reading. Average hourly earnings expected to tick down to 0.3% from 0.4. Average hourly earnings year over year expected to come in at 4%, in line with last month. Then at 10 a.m. on Friday, we're also going to be getting the ISM manufacturing report. We're looking for 47.6, down from 47.2. Prices paid expected to rise to 49.3 from 48.3. So like I said, lots of data coming this week, and I didn't even include the initial jobless claims data just because we're going to be getting a lot of jobs data, and the Friday report should really trump any of the other initial jobless claims data we're likely to see moving forward over the rest of this week. And so when we think about where the euro is at this point, again, we've been watching the euro. And the euro's gotten down to this area around this 107 region. And this was one of the spots where we thought maybe we could see some consolidation just because we were getting oversold on the RSI. I certainly think we've consolidated enough at this point in this range. So if the data continues to come in better than expected, as it's been basically doing now for a couple of weeks, then there's a good chance that we could see the euro begin to make that move down to 106.7. Certainly the RSI has come up off the lows, and there is plenty of room on the Bollinger Band to start that move if we start seeing some data that should come in better than expected. When we look at the British pound, we can see that it's actually made a move back up towards resistance at this 130 region. And we're also seeing the RSI recovering just a little bit. So at this point, the British pound, again, is going to largely be determined by where the economic data is going, and really, perhaps more importantly, where U.S. rates are going, because, again, U.S. rates have been rising pretty dramatically over the last couple of weeks, and this is allowing the dollar to really strengthen versus many other currencies. And so when we look at the pound here, you can see there's a little bit of a downtrend at this point. So we're going to want to keep an eye on this because clearly, at this point, we've gotten just barely above the 10-day exponential moving average, and this has been serving as resistance on a couple of occasions. So if we can hold above the 10-day exponential moving average and get above this trend line, then we're talking about a move up to this 131 area, potentially opens the door to maybe even getting back to this 130, 120 area. I think looking for 132 may be a little bit of a stretch at this point. Meanwhile, if we were not able to get above this 130 area, we really need to cut below 129. If that should happen, then I think we open the door on a pathway down to 127.90 or so. When we look at the yen, it continues to move higher. It did struggle a little bit at this 153.90 to 154 region. If it's able to break above this area in here around 154.10, I think that's going to open the pathway to potentially going even higher, maybe 155.5 to 156. Certainly when you look at the yen, the RSI is still trending higher, not really terribly overbought at this point. Bollinger Band is suggesting we're a little bit toppy in this region. But again, as long as we stay above this 10-day exponential moving average, I think in general, as long as the 10-year yield in the U.S. continues to rise, the USDJPY is going to continue to move higher and the Japanese yen is going to continue to weaken versus the US dollar, just because, again, the US economy just continues to look much stronger than what it's been, than what it was expected to be. And so, again, the trend looks like we're still looking at a move higher in the yen. When we look at copper, copper has been really is kind of directionless the last couple of days. We had thought maybe it was setting up to make a move lower. That hasn't been the case yet. We are still below the 10-day exponential moving average, so this is an important spot. We're going to want to watch here to see if we can break below 430. Again, if we break below the 430 area, that's going to open the door to much lower levels, to around 413 or so. The RSI is really also moving sideways, suggesting that momentum has really stalled at this point as well. So again, this could also be seen as a descending triangle if you start drawing out, along the tops, and then of course if you draw along the bottoms, you could say there's a descending triangle here. Maybe you can even argue that it's some sort of bear pennant that's formed, which also would suggest maybe we get a move down towards this 410 to 413 region on the pound on copper. Well, when you look at oil prices, crude oil prices here in the U.S., WTI, that's making another move and another attempt to get down below the $66 level. Again, this has been the big level of support and resistance. It goes back years. Every time we've gotten to this level, it's either been a resistance zone or it's been a support level. This is now the second time this year that we're testing this area. And again, you can see the difference between this attempt, where we are right now, and these past attempts. In this attempt, we were much more oversold. In this attempt, it wasn't really very convincing. This attempt, we're much higher on the RSI, which really suggests to me that if there is downward momentum, we're not really at oversold levels yet. Even when you look at the Bollinger Band, it's really going flat at this point. And so what this is kind of implying to me is that there is still further downside momentum. I think it's going to probably I think we're probably going to see another couple of days of consolidation at this 66 area before we really see a breakdown. And I think once that happens, you could be looking at oil moving back into this 55 to 57 area. It certainly looks possible because, again, every attempt that oil's made to move higher at this point has been just rejected, and we continue to see this downward motion in it. When we look at the DAX, again, here's your trend line. We've been talking about this trend line. DAX at this point has really been moving sideways. It is in danger of breaking this uptrend, but really we need to see something a little bit more meaningful. In other words, if we just see the DAX kind of just trade sideways through the trend, that's not really something that's going to be a tradable type of move. If you were to see the DAX, let's say, gap lower tomorrow or the next couple of days below this 19,450 area, I think that opens the door to much lower levels. I think that would be what's needed to really get this thing moving down to this 18,870 area. I think if you're just moving sideways, you're just looking at a potential setup and another run higher. If you start moving sideways for a couple more days, I think it's really going to take a gap below this level of support and this trend line for us to really start seeing some downward momentum in the DAX. Again, momentum has been sideways. There has been no momentum. And also here's your 10-day exponential moving average, which has been acting as support as well. The FTSE is moving lower. When you look at the chart, you can see all this support that's been drawn in during previous sessions we've done that shows all this support at this 8,180 area. Even when you go back to this period in time here in June and July of 2024. So really all this FTSE has done over the last few months, several months at this point, has traded sideways. And that's basically where we are at this point. Until we get some sort of meaningful break below 8180 or some meaningful break above 8350, I think you just continue to play those ranges. And again, if you get a gap below one of these levels or a gap above one of these levels, that's going to carry a lot more weight than just sort of, meandering through it. When we swing over to the NASDAQ, we've been talking about these potential, red line triangle wedge here. That appears to not really be working out, at least from the standpoint of this wedge potentially being something that's bearish. All we've done really is just consolidate sideways, although the NASDAQ had a nice move higher today. It looks like for now we have some resistance at this 20,000, call it 665 level. I would say that there's probably very strong resistance at the prior high around 20,675. You can see how the uptrend and the horizontal resistance come in to meet at that point. So right now, this is the major area of resistance that we need to see the NASDAQ break above in order for this rally to continue. In the meantime, there's also this 10-day exponential moving average. Notice that today we bounced off of it and moved higher. The last couple of days, it's been serving as support and resistance. Every time we've gotten below it the last couple of days, we bounce right back above it. So right now, the momentum clearly seems to favor the upside and potentially a retest of this 20,000, call it 700 region, at least, which would take us back to the old highs from July. This is the one index that really hasn't been able to do that. However, if there's going to be a lot of earnings coming between today and Thursday afternoon, and that's really the big risk because we just don't know how these companies are going to report. Alphabet obviously reported already, and then you're going to have a bunch of other names, Microsoft, Apple, Amazon, and Meta all reporting before the week is out, and these are obviously the heavyweights. So you really have to pay attention to these data points because they're going to have a lot to say about whether or not the NASDAQ can move higher really from here. At least when we look at the S&P, there's still, you can see we've really been trading more sideways the last couple of days. We didn't really get that move higher today like we did in the NASDAQ. So again, the 10-day exponential moving average really serves as a good level of support and resistance to kind of give you a sense of which way momentum may be going. And right now that momentum appears to be going sideways. We still have this bearish engulfing signal that we got about 2 weeks ago that hasn't really completely played out. Again, these have sometimes taken time to play out, so it's not really impossible to say that maybe there's still some more downside risk available until really we see the S&P 500 gap above this 5860 area and actually hold the gains. It's really sort of hard to say that the S&P looks extremely bullish here. I mean, certainly the NASDAQ looks a little bit more bullish, but there's certainly a lot of overhead resistance that's still in play. So I would continue to just monitor where the 10-day exponential moving average is and monitor the S&P versus that, using also obviously the information you're getting from earnings that come in over the next couple of days. Finally, when we look at the Dow, you can see it's a very different setup, and that really has to go to the fact that the Dow doesn't have NVIDIA in it, and then the weightings are a little bit different in the Dow versus those of the S&P. The Dow is a price-weighted index, meaning that stocks with higher prices get bigger weightings, and stocks with lower prices get lower weightings, where the S&P is a market cap-weighted index. So this is showing you a little bit of the differences between the two. You don't really see these very often, but the Dow is clearly demonstrating something different. And you can see that today we came up to the 10-day exponential moving average, and we hit that level and then moved down. Obviously, we have this big area of support right around 41,900. So you have right now this setup where this moving average is moving lower. You have this support level. If you break this support level, you're talking about potentially moving all the way back towards the August lows. If you're able to break above the 10-day exponential moving average, I think you probably have room to get back to this 42,900 area or so. And at least for right now, I think a lot of this is going to be determined on the data that comes throughout this week. So I think it really means that you have to just be on top of your game when you're trying to assess the markets as we move through this week. And then hopefully next week we'll have a little bit more clarity. Anyway, have a great rest of your week, and we'll see you next.